morning, traders. Welcome to the Dodge Trader Morning Call video for Wednesday, December 9th. Well, we did get another push lower, but that was pretty much it on the opening. If you looked at a 5-minute chart of the spiders or the ES, you'll see that we pretty much chopped around all day. And that's your cue as traders. Once you get that push lower, if we don't take out the morning low or the high, and you can either go by a 15-minute opening range, you're pretty much done for the day. No sense doing it unless you're a really fast scalper. Stay away from the market until you get some movement. Now, a couple things I want to talk about. We're coming, as you know, into some tax selling this couple of weeks, and what's going to get hit hard the most is obviously going to be the commodity sector, materials, beaten down stocks that didn't work, you know, such as like Twitter and stuff like that. They'll get a bigger push up, but then they'll get a nice big move to the upside. Okay, big push down, then a nice big move to the upside. So just kind of keep that in mind. Now, once the tax selling's over, we do come into that seasonal strength time of the year. You look at the Traders Almanac, you'll see that we do come into the last 2 weeks of the year, markets really run up to the upside. What we're going to be looking for clues for that is going to be the Russell 2000. The Russell usually moves first before anything else. Now, as we all know, I've been pointing out we have market divergence all year where the transports in a Russell have lagging the other indexes. I'll show that to you again. But that doesn't mean that the markets are not in trouble. I think we're going to have a pretty nasty maybe 4 to 8 weeks going into 2016. And then if we can get a really good correction, then I'd say we might even move much higher going into 2016. But we need that correction. There's a lot of ifs in the marketplace. Europe, China, I can name a bunch of them. You know, and I will have an end of the year call in the videos and talking to you about specific asset classes as well. Okay, so what I'm looking for crude oil. I'm looking for gold to push much lower. My spot in crude oil is looking at a CL contract would be somewhere around $32 to $33. I really like gold. I think gold does go a little bit lower. Remember, we have the FOMC rate decision that comes on the 15th and 16th next week. So that's going to definitely, no question, affect the direction of crude and, of course, gold. So no one knows what's going to happen. But if you look at the banks are looking like that they're not going to raise rates because they're going lower. They should be rising on an interest rate rising environment. That's not happening. So just wanted to point a few key things out, what to look for going into the next couple of weeks, okay? Remember, I am looking for another push lower. We have the McClellan oscillator. If you look at it, it would be NYMO. We look at that on a daily chart. End of the day, it's at -53. If we can get a push lower today in the high 60s, 70s, that'll mark an oversold state in the markets where I think maybe we might be able to bounce towards the end of the week. But we'll see. Let's see what happens going into today and tomorrow. But right now, let's take a look at the indices. IWM Russell 2000 ETF. I have a symmetrical triangle and an uptrend channel, whatever you want to look at it. We broke the lower trend line here. Now we're kind of back testing, but I want to see a little bit more movement, maybe another day or two lower, and then let's see if we get that big push back up again, okay? But the Russell is definitely going to be key of watching what the markets are going to be doing. Transports, you can see here, symmetrical triangle, breakdown lower. This is not a very good sign, guys, for the markets to come. Now, we have market divergence. That could happen down the road. It does not have to happen these last 3 weeks. Remember, market divergence takes time before it actually kicks in. But you need to be aware of it as traders. Doesn't matter if you're a scalper, day trader, swing trader, long-term investor. You need to know what's going on here around your environment. Okay. Now, what I want to show you is let me see if I can grab the weekly chart in the IYT. Okay. Now, here's the weekly of the transportation ETF. I just showed you the daily. Now, here's what's really troublesome is a head and shoulders pattern on a weekly chart. Here's the neckline. We just kissed the neckline right now. Now, head and shoulders patterns are not really the greatest in the world to trade because what happens is they'll flush down. A lot of the bigger market participants, bigger traders and funds know they see this. They'll push it down, get everybody short, and just rip right back up to the upside. So what I'd like to do here is on the weekly chart, well, on a daily or whatever the case may be, but trading a head and shoulders pattern specifically, I'd like to see the breakdown, maybe a day or two below the neckline, and then a bear flag into the neckline and fail. What does that give me? A lower high from this previous high. Once we fail, then I think all bets are off to the upside. I think the Russell will follow suit because Russell also has a weekly chart, a head and shoulders pattern, and then we start to sell off in the markets. I don't think this is going to happen. It's going to take a little time. Remember, these are weekly bars, so you get 2 to 3 weeks down below, maybe even a bear flag. I think the selling will be in January where the markets move hard. Now, remember, this is anticipated. This does not have to happen. I let the markets tell me and dictate where and which is the next move, up and or down, okay? Remember that, okay, guys? Really important. And then lastly is the spiders. You could see this big wedge pattern formation. We'll get into the Das Trader chart. You could see right up in here we had that beautiful bearish rising wedge, and I'll just show that to you. We had the break, and now we have more of an M formation forming. I don't think we get below 202.50 in the spiders, I'll be honest with you. I do think that we do get it a little bit lower. Maybe we get a little bit of anticipated selling. If crude oil starts to sell off yet again, that's going to put pressure on the S&P. It's heavily weighted in oil stocks, and I think we get down to this point maybe at the end of the week, and then we start to rally again. But let's look for an interim low this week and see where this market is headed, okay, guys? Hope it helps. Use your stops out there. Very important. We're coming into and approaching some good volatility where we can trade. Now, if you can identify an inside day, like I just mentioned on a 5-minute chart, it's going to keep you out of harm's way where you're not going to get stopped out. Step aside. Remember, guys, cash is a position. Hope it helps. Talk to you tomorrow. Take care.